So, stages of technology life cycle. In the early side, we talk about practical method to enhance the organization existing IT IS control. Now, here we talk about stages of technology life cycle. What are the stages? In the technology also there is a life cycle, it's going like a cycle, right? So, there are research and development. Through the research and development, you are going to innovate new product based on the facts that you have in previous 5 years. So, you are going to develop some product through research and development. So, R&D is a main concern at initial stage, because without R&D, you cannot implement very good new product. So, action, time frame from product invention to the point at which out of pocket costs are fully recovered. Now, you have developed the product, you have put it to the market and you have sold it. Now, you have recovered the cost. Then, you go into the maturity level, that is, new innovation becomes accepted by the general public. So, new innovation that you have done will be accepted by the public. It means you are research and development, you have put it to the market and you have earned the cost, and then your product is in the market, it is selling from one person to another, and likewise then now you are in the maturity state, it is accepted by the public. Through the research and development you develop it and you put it to the market, and from there you earn the cost, you have recovered it, fully recovered, because you have sold in the market. Now, product is living in the market. Now, everybody knows this product is very good. Now, it has matured. Now, it has matured, then matured will be decline later on. This is the decline stage, and then you will have to do research and development to develop new features. So, I will tell you in the board that I will explain is research, R&D, right, then what is maturity and decline. So, you through research and development you develop the new innovative products, right. So, this is the products, you put it to the market through the new innovation there you develop it, then it was sold, cost recovered. Now, you are okay in the market. It means you have achieved what you have, but this product has very good quality. It has a very good quality. Now, then later on, after some years later maybe, so this product with the same features, the earlier that through the research and development it was innovated, now also let us say is here one, let's after second year, after 4 years, 2 years duration. So, now it is matured. Now, the product are matured, but it has the same features. But and here goods sold is around 1000 pieces. Now, at this level sold about 3000 pieces, but the sales people will identify these selling pieces will decrease in the next year 2000, 1500, then 1000. through the sales report you identify this is declining, it is declining, now product is declining. Then what do you want to do? If you want to retain this product further in the market, what you have to do is you have to do the research and development. So, you are again doing the research and development, then there is a new products, the same product with new features, right, the same product with new features will come, then likewise it will go to the decline stage. Again you have to do the new research and development, do the new features, or else you can develop a new product. Okay, it is clear to you now. So, let us talk about acquisition. What is this acquisition? Acquisitions are transactions in which the ownership of companies, other business organizations or their operating units are transferred or consolidated with other entities. So, there may be so many acquisitions if your organization is going down in the market. It means, so in previous month also I heard that one company was closed because of some financial issues. So, then another company can buy it, purchase it. So, ownership of the company will transfer. So, that acquisition is a transaction. What is the transaction? Ownership of the companies. So, what is the main transaction of the acquisition is ownership of companies. So, that can be sometimes asked in the question paper. Acquisition models. So, what are the acquisition models? So, there can be different acquisition model. So, I will briefly explain these things. Partnering, an agreement, an arrangement between organization or people to work together. So, there can be partner with some other companies. So, Starbucks and Scooty, so those are kind of example. So, some kind of companies partnering with some other companies to develop one product. So, external partnering. So, joint ventures, external third parties with the view to achieving a common purpose. Computer parts, vehicle parts. So, one part of the vehicle will be developed by some other, right. So, that is called external partnering. And joint ventures. So, in order to develop a robot, so you may have joint venture with different products. So, joint product developments. So, in the product development cycle, so one part will be done by somebody else. So, you have joint venture with them. So one to the development of one products. So, 2 or 3 more people can be joined. So, that is called joint venture. But in the external partnering, in order to develop one product, let us say a car. So, you will outsource some, you will purchase some materials from somewhere else. So, as joint ventured BMW and Toyota Corporation on research into the high hydrogen fuel cells vehicles. So, they are going to invent something new thing, and for that they have jointly doing some things, that is the joint venture. Google and NASA develop the Google Earth through the joint ventures. Strategic alliances, there is another way of acquisition. An agreement between 2 or more independent companies to cooperate in the manufacturing, development or sales of products. So, 2 companies can get together and do their requirement through agreement. and franchising. So Pizza Hut, McDonald's, that you can franchise the McDonald's and you can open a new McDonald's in somewhere. So that is franchising. Grant the license. It has a license that they grant the license to us, then you can do it. So CSC Lanka also may have Cambridge examination franchising. So they have given the license to this. I hope they have. So they can have the examination here also. What is the technology acquisition? So we talk about acquisition. These are company acquisitions, right? Now we talk about technology acquisition. In all, bridging in new technologies from external sources rather than using the firm's own internal research and development activities. So you are not going to do the research and development activities, you are going to purchase some research and development and embed into the products what you have in your company. So that is called bringing new technologies into the organization from external sources. So there are two elements, external sources are there, new technologies here. You are bringing what? New technologies into the organization from external parties. So and also it is like a technology transfer with transaction cost associated with the various stages of the acquisition process. So in the acquisition process, the technology acquisition process, there can be various of processes. So in those processes, the technology transfers can be done in some stages. Why an organization might require new technology? Why you need to require technology? Let us say now you feel that everybody is using a smartphone, but still if you are using a normal phone which is old more than 20 years back, that we had normal phones, and not even 20 years, let us say 30 years. It is like a brick, that very big phone. So if you are using that one, does it mean that you are complying with the new technologies now? No, because in new technologies which are built into the mobile phone, that you can do so many things. Can we do the same things as what we do here now with the old technologies? No, we can't. So so organization need some new technologies. Is why they need the new technologies. That can be an old system that you are using, so you need a new system. Slow or out of memory, so your system is very slow, so it provide very bad feedback to the from the customers. Difficulty in upscaling, so it is not difficult to upscale. Poor data management is there, poor security, no integrations, lack of analytical and reporting capabilities, new product and services requiring new technologies. So these are the things that is by reading only that you can understand what are the requirement. Digitalization of business and commerce. This is chapter 3. So we are starting the chapter 3 now of this revision programs. Comparison of the digital business with traditional business. So we are going to compare this one. So it's a familiar thing to you. So digital business and traditional business. When you think about traditional business, you think in past what you did in business. You think at present what you do, right? So through these attributes we will understand communication. So in digital business, digital and multi-channel is there, email, web, SMS. In traditional business, hybrid mode is there. It means both can be accommodated, manual and digital mode. Combination of paper and digital, and send document by the post and by email. So those are the things. So still that we are using this hybrid thing, that let's say sometimes you write a letter and you sign it and scan it and send it to them without posting. So both methods are involved there now. So tools. Digital and web-based tools are there, and local legacy systems were there earlier. Automation processes are there, and manual processes are there earlier. So culture, small and younger company was there, and also the companies are very young because not like the established company. So, but established companies nowadays also acquiring the digital mode. Now they are in this platform, digital business. But when we compare as a percentage, now in the digital business, the more scale is small and younger companies. There are more small and younger companies rather than established companies. So experience, fearless. Years of experience is having in digital business, because you have seen that some people have developed their business in early 1950. Now it is more than 70 years old, but now they have developed into the digital mode. So in the percentage wise, if you see that there are more digital experience wise, they are very good in digital. Benefit of digital business. So what are the benefits is having? How many benefits? What are the benefits? 24-hour operations. Digital person is a person digital. It is easy to see. New contact channels with customer. So earlier you had note down the customer's contacts in a piece of paper or in a mobile phone or wherever. Now you have systematics. Processes are there. Now you have fed those information in the systems. Now you can fetch those information, you can retrieve those information, and through the Facebook and through different medias now that you are using to gain the customer's contacts. The customer at the heart of the universe. So you don't need to rely on the customer base in Sri Lanka. If it is open in the digital mode, so you have the digital business. Now it is open for everywhere, even in foreign countries all over the world. So it is open. It improves efficiency and productivity. So automatically this digital business improve the efficiency and productivity. You must have very good systems in place in order to deliver the product to the customer. So it is now very efficient and also productive. The people we need not to come to your organization and buy it. So it may cost something for transportation as well, but now you can get it delivered to your doorstep. It encourages innovation. So in digital platforms, in digital business, so you have to do much more innovation. You have to inline with the technology. If you are not inline, if you are not going equal with the technology, what will happen is you will not be having very good innovation, that you don't know what the market is doing. Ultimately you will fail in the product. So you have to have very good innovation, and it should be encourages for the customer. It makes communication and teamwork easier. So communication is easier now, not like earlier. You can send email, even though you can send via WhatsApp, via Messenger, or there are different methods that you can communicate with the people. You don't need to talk to the people. You can just send a SMS via Messenger, WhatsApp, or whatever the method. In order to send a picture or something like that, you can send it via WhatsApp. Or there are different platforms that available now. Instant access to data to provide analytical insight. So instant access to data that provide analytics and insight. So there can be so many analytics, the details of the sales of product that will be provided. So in digital mode it is easy. The access to that is very easy and can be done quickly. What are the 4 analytical types? Here we talk about these analytical things, then we talk about here 4 analytical types. Descriptive analytics. That is something like what happened in the past. You refer to the backlog, you refer to the back informations, and refer those information and see what happened in the past. And there were some issues happen. In this diagnosis analysis, you diagnose what the doctor does. When you go and consult the doctor, he will diagnose what the illness you have by looking at you, while looking at what you did in past. Whether you had cough or you had phlegm, or there can be so many features that has changed you. So, root causes analysis and then deeper analysis to the answer why this happened. So, in this diagnosis analysis, it is questioning about why it is happening. Earlier, what happened in the past was analysis in the descriptive analysis, but in the diagnosis analysis, why did this happen? So, it is easy for you to remember by looking at this keyword diagnosis. You remember the doctor, what he does, why did this happen. In the descriptive analysis, what happened in the past. Predictive analysis, this predicts what will happen in next, in future what will be happening. So, prescriptive analysis take predictive data to the next level. What should you do? It suggests various courses of action and outline what the potential implication would be for each. Predict the future. In this one, here also predict what will happen next. Predictive data to the next level. So, you have predictor that will be happen, you are taking your data next to the next level. So, it means your prediction is done, now you are going to do something to the prediction. So, you think that this will happen next. So, if it is happening next, that what you have to do? Let us say your car is having a small leakage problem of oil. So, oil leakage is there. So, oil is getting down to the floor. So, you investigate that, you see that there is a problem in the engine. So, but you are not going to repair it, you drive the car, ultimately that will be in trouble. So, but you predict what will happen past, you know that ultimately you will have to repair the engine if he does this. So, what you have to do? You have to go to the garage and repair the vehicle just now. So, these are the 4 analytical types that you can use. What are the drawbacks and limitation of digital business? So, are there any drawbacks and limitation? Yes, not like the traditional business, this process also, the digital business processes also has limitation. Those are immediately give the feedback, privacy issues are there, security issues, the cyber attacks can be there, security conduct. In privacy issues, there can be so many privacy that because you are open to the digital mode, sometimes you are entering some personal information in some website when they need your information. So, there can be privacy issues, and also fake news, it can be spread like a gossip. So, in the social media, so if you are going to promote one product in the social media, so you prepared the e-flyer and put it there, then what will happen? Some people will tell wrong thing about your product. So, that can spread everywhere. So, in the immediate feedback we talk about, so people will give immediate feedback. Let us say that once you publish advertisement in the social media, immediately somebody will give a wrong feedback, saying your objective will not be reached in there. Technology development. So, what are the technologies development today's? Data mining and enhanced customer analytics. So, through the big data, you are analyzing the patterns, behavior, likeness, dislikeness, and then you are going to do some analysis. So, technology that provide an enhancement to data mining and then enhance the customer analysis. Targeted advertising. So, organization can directly target the individuals and that providing them with news, ideas, product and services all via target delivery. So, it is targeted, individual targeting can be done. So, to do that, technology development can be embedded. So, cryptocurrency is there. So, cryptocurrency is a Bitcoin, let us say as a Bitcoin as an example we can say, we talk about in the blockchain. So, it is a new technology. Connectivity and IoT, Internet of Things. So, IoT was there, that is a very good technology. Now, it is used in most of the countries. Technological development prediction. Futurology is the science. So, you predict the future of the science. So, next few years, after 5 years time, so most of the things will be delivered to your doorstep. You do not need to go to the supermarket and buy it, because everything will be there on board in the website. So, future, the science will be predicted. So, meta technology. So, eye surgery, industrial cutting, so meta technology is used. So, industrial cutting also some kind of the technology like meta technology through the laser beams, they cut the very heavy iron. So, we talk about those things. This good technology is IoT, Internet of Things. So, we will talk about this in a little brief. Network of internet connected objects. Internet connected object. Through the internet, everything are connected. Your laptop is connected to a printer and also it is connected to the internet, and also through that you do some kind of work. Then when you are browsing the internet, so you go to a website, that website fetch the information from their stores. So, because products is available in the stores, then it's go to the store's computer and server and fetch the information. Likewise, the devices are connected through the internet. That is the main idea. So, in general meanings that we can explain, you have things that sense and collect data and send it to the internet. This data can be accessed by the other things too. So, let us talk about that one. Top Internet of Things. So, top Internet of Things, what are the IoT example? Connected appliances, smart home, security system, autonomous farming equipment, wearable health monitor, small factory management. So, I have given a small IoT equipment that through this IoT sensors the information will be detected, and there are kind of devices that will be using for this. And IoT product, what are the IoT products? Smart mobile phones, smart refrigerators, smart watches, smart fire alarm, smart door locks, smart bicycles. Smart bicycle also there, smart cars can be there, fitness tracker, smart security system. So, IoT kind of I will draw in the board. Let us say there are let us say IoT thing, smart refrigerator. It has the items in the fridge. right. This has vegetable, meat. When it is finishing, it gives a message to you. So, through the internet, this is internet, you are connected through the mobile phone, you are connected. This is mobile, right. So, this refrigerator should be connected to the internet through, there are some kind of Synophy's 1 products. So, there can be different products. Through this one, because it sense, this one is sensing information from this refrigerator. So, when this vegetable is finished, it gives a message, oh, today this vegetable are finished, right. Then through this one, through application, it goes through the internet and it's come to a mobile. So, no, it is telling meat 20%, veggie 10%. Okay, you know that the item in the fridge is reducing now. Now, you have to go to the supermarket and buy the product and put it. Likewise, there is a AC, air conditioner, that also connected through a kind of a gadget, through that it is there. Now, you forgot to switch off the AC when you go out, but from this device you can switch off. You can switch off the AC, you give the information, then it comes here, this what will say, off, switch off the AC, AC will be switched off. Likewise, you can remotely manage this one. Oh, let us say there is a door, this is like a smart door. When you appear here, when somebody appear here, when you come, it will automatically open automatically when your face is recognized. If a newcomer is coming, that will give a message here to here, newcomer has come. And also this can give a ring, alarm is there, it gives a message to you that you are in the house, this is newcomer has come, because it is identified through the camera that somebody is arrived, right. Then from this door, there is a screen in the your kitchen and in your living room that says about the person, he has arrived in front of the door, those information will be given. And your kids say, oh, somebody is there, so you are not authorized to come anyone inside the house except your grandparents. So, grandparents are allowed. Then when grandparents comes, it is automatically opening. So, when grandparents come, only the children are there. Children give a voice message, oh, your grandparents came. When you comes, they will be getting a message, your father came, mother came, like that. And let us say, without switching on this, off in this AC, you are going. When you close the door, right, now there are, let's say, there are 2 rooms in your house. Now AC is there. When you close the door, there is a door. Oh yes, in here there is a main door. This is your house. So in here AC is there. You are switching on the AC. When you close this door, when you close it, the AC will automatically close. Through a device, it identifies automatically. Then there is one person. Now AC is on now. There is no one. So you are going out, and you are going out. You are not. You are locking the door. If you are not locking the door, it will give a message, oh, your door is not locked. Then you come again and lock the door, right? And when we are locking the door, sometimes it can say AC is switch on. In the living area, AC is switch on. Please switch off the AC and go. Or else, when you close the door, it will automatically switch off. Likewise, we can build up many things in this using this IoTs. It means all these gadgets, all these items are connected through the internet. Through the internet, these devices, refrigerators, AC and doors and many devices can be interlinked. So it is called IoT. Through the internet, we can do many more things, right? This small video also will tell about their kind of new products, some of the unusual vehicles that you can see.
Some of these vehicles already exist, and some will appear in the near future. The Manta 5 hydrofoil bike, which was released by bicycle designer Robert Alonso, is a water analog electric bike. His aqua bike has underwater wings and electric assisted torsion pedals. Manta 5 has an aluminum frame, underneath which are 2 submarine wings. They lift the bicycle over the water when it is moving. The bicycle is powered by a person.
So these are smart bicycles and smart equipment that you will be able to use in future. But in some other countries, this is heavily used. So I am not going to detail about this one. I will go to the next slide.
Hi there. Today we present to you the 10 most unusual vehicles created by both professionals and,
let's say, smart cars. So
and then this actually lights up here in the hammocks.
you better refer to these vehicles. There are unusual vehicles you can refer.
What they're going to do is put
All these things are done using new technologies.
unless you're 7 foot tall.
Okay, now chapter 3 is completed. Now we are going to chapter 4. The role of information technology, role of information system and business. What are the role of information system and business? We talk about information strategy earlier, and IT strategy, IM strategy. IM strategy and IC strategies help in the IS strategy. So here I am not going to talk about much about this one. Characteristics of IT and I strategy. What are the characteristics? High cost. If you are going to implement a IT or I strategy, so cost is higher because you have to purchase much more equipment, so you have to spend much more money. So there is high cost. Critical to the success of many organizations, it is very critical, but sometimes most of the organizations is unable to possess this because of high cost. Use as part of the commercial strategy in the battle for competitive advantage. So competitive advantage is here because you can win the competitive market using this information strategy. So it can be included in your strategic plan as a part. So that will give a commercial impact to your business strategy when using this information system strategies. So that impact on customer services, you can improve the customer service. So if a core level of staff in an organization, it means once it is developed, let us say you are implementing a new ERP in the organization. So that will affect all of the staff in the organization because there can be new processes. So earlier you did something in a different way, but now you will have to do in another way. Lead to structural changes within an organization. The structures of the organization also will be changing sometimes because of this information strategy, because you have to align with the information strategies, otherwise you cannot exist in the market. Require effective management to obtain the maximum benefit. So you can obtain the maximum benefit. So you can maximize it using information system. Involve many stakeholders inside and outside the organization. So that can interlink with the outsiders as well, also in the insiders. So that is a pathway that is given to interact with others. So it is easy like nowadays, not like in early days. So early days that you have to go and visit the people, now you are easily contactable with the people through the now everybody knows that through the video communication, most of the meetings are happening nowadays due to COVID-19 situation. So everybody is connected online. Now they are heavily using the online platform to communicate with each other. So you are connected with the outside organization remotely. So failures of a very large IT investment lead to business failures. Very large IT investment is failing business. Why? There should be a reason. There should be a reason for failing because of IT investment. What are those? Poor communication. Enterprise project usually impact a large amount of people. So you are not communicating well about the investment in the business. So that will again react you in a bad way for failing the business. Underestimating or ignoring impact of change. So underestimating or ignoring. So you are underestimating your IT involvement. So you think that your IT involvement in the organization is sufficient, but you are not up to date, but you think that it is not required. So ultimately you will be failing. So you are ignoring the impact of change. When you are implementing a new IT system, you don't care anything, but you implement it. You don't see that what will happen in future if you implemented this IT system, then automatically the organization will fail. Lack of leadership. There should be very good leadership in order to be successful in the IT investment. So, let us say you are going to implement very good ERP system, but everybody will dislike about the ERP system because there can be so many new processes that they have to involve with. It means they have to change their pattern of working. But without having a good leadership, that cannot be done. Lack of strong executive for sponsorship. So, executive sponsorship can be lacking. The poor project management, project management also can be poor, because there should be a very good project management and also executive sponsorship. So, because of those things, business can run. Even though you have invested well in IT, if it is that can be a large investment, but that will be failing because of this. And poor planning, you do not plan the IT investment, you just invested and brought into your organization. Ultimately, the customers will not be accepting your product. So, it is a poor planning. Trying to do it cheap. So, you may try to do it cheap, you do not buy new virus guard which has all the filtering mechanism, but you are buying a very cheap one and install in the server. Ultimately, it provide an access to hackers to go inside and do anything what they want. Ultimately, your business will fail. So, if you are going for cheap one at first without looking at the security, without looking at the importance, without looking at the quality, ultimately your business will be fail. Lack of technical knowledge. So, you will be having the lack of technical knowledge, you do not know how to use the system that is invested and installed in the organization. So, you have to gain that knowledge, you have to educate your staff through the leadership, then they will tend to study the system that is installed as a new system. So, because of those things, that can be fail. So, those are the, so because of these things, there can be business failures. E-business and e-commerce. What is e-business? What is e-commerce? How do you recognize this both? What is e-business? Is the use of electronic technologies, including the internet, to support and transform business processes. In order to support and transform the business processes, so while e-commerce is the use of electronic technologies to buy and sell products and services. In this e-commerce thing, the transaction is there. So, in e-business, that support and transform the business processes. In e-commerce, buying and selling thing is available, but e-business it is not there. It is transforming electronic technologies into digital mode. So, we will talk about the comparison things. Running business using internet is terms as e-business. So, in e-business is running a business using internet technologies. E-commerce, trading merchandise over internet is termed as e-commerce. You are selling goods, products through the internet. Here you are running the business using internet, here you are selling the products using internet. Running the business, selling the product, running the business, selling the product. So, this is the way that you can identify the both differences. E-business is the broader concept and is a superset of e-commerce. It is a broader concept and also a superset of e-commerce. E-commerce is the part of e-business It's a subset. It's a part of e-business. The correlation of these two are e-commerce is a part of e-business. The superset of a lot of e-commerce things is a part of e-business. Business transactions are carried out, commercial transactions are carried out. They are doing the business. They are dealing with some other people. In here, through that dealing, they are going to do a transaction, pay money. So here it is money mechanism is involved. Transactions are not limited. Transactions are limited. Here the transaction is not limited. You can do any amount of transaction. But in e-commerce, transaction can be limited. Mainly, what are the types? Main types of e-business. Pure play, only online only. Brick and click, combination of online and offline. Online only can be there, online and offline also can be there. What are the e-commerce types? B2B, B2C, C2C, C2B. Those are the common wording that you can identify. E-business is not limited to monetary transaction, but also to marketing, operation, customer. So, e-commerce is limited to monetary transaction. Here it is not limited, here it is limited. In e-commerce, monetary transactions are limited. You can do any amount of monetary transaction, there is no any rules for that. You can do any amount of transaction. Here monetary transactions are limited. But also to marketing, operation and SCM. So, I think you got a very good idea about this. In my previous videos also we have explained this in clearly. So, let's see the comparison again with some other elements. Activities of e-business are online store setup is there, payment gateways, online customer support, e-marketing. So, you have to establish these things. E-commerce, buying a mobile phone for online ticketing, electronic transfer of funds, paying tax online. Internet, in e-business, internet, intranet and extranet are used in e-business. But in e-commerce only internet is used. So, these are the differences that you can learn. So, let us talk about main type of e-commerce. Business to business. So, online order transaction between business. You have a business, it means you have one company, so there is another company. So, you are going to sell one product to another company. That company will sell to the consumer wholesaler. That's all right. And there can be wholesalers, manufacturers, distributors and other type of B2B sellers. So, transaction will be done from one company to other. One company will develop the products, they will sell those products to company B, company A will sell to the company B. So, there are two companies involved. So, company B will sell it to the consumer. So, company B will be the wholesaler then. The manufacturer will be the first seller, the first company. Likewise, the business, based on the business type, those B2B transactions will be happening. So, please remember this image when it comes to B2B. So, what is B2C is? Business to consumer. Transaction conducted directly between a company. As an example, McDonald's is doing this one. Company and consumer. This is the company, it sells directly to the customer. So nowadays, due to COVID-19 situation, most of the companies are engaging in this B2C e-commerce, because they can directly reach the customer. So you have the customer audience, they are with you. So you are directly selling this. You are sending this to their home, to their houses. You are sending the things via transportation mode. So and also in this mechanism, you can give the product at lower cost. Because there are no any intermediate people to involve for selling to the consumer. So you are in the organization, you can directly sell it. C2C, consumer to consumer. Consumer is selling to consumer between private individuals, eBay and online auction site and Amazon, and which act as both the B2C and C2C marketplace. So in the eBay also you can register as a business and you can sell it to the people, or else people will publish their things to be sold, and then it will be taken by some other and sell it. So likewise, in eekman.lk and other sites also, they are doing the same thing. All the customers are involved, they are publishing their products in the website. So somebody will see it and buy it. Customer to business. Here, a consumer to business. So customer to business. Both words can be used, consumer or customer. Customers selling their services to products to business. And consumers can offer products and services to companies, and the company pays consumer. So as you know that this process also established very good manner in COVID-19 situation, because people who are working from home, the companies was tend to hire the people who like to work from home. There can be freelancers who develop some software, let's say software package. So they are committed and competitors in developing some software. So they hire them. So consumer provide goods and services to the company, then company will pay it. So let's say you are not getting the cleaning service from a company. So let's say here, if we establish a cleaning service as a company, so cleaning service is providing some service to company, but company A, company B, company A will not buy the service from the company, they decide to buy it from a customer, it means consumer. So consumer, the cleaning people, they will be contacted directly and they will get the services. Then there is a customer to business, consumer to business involvement. So the consumer provide the goods and services, company will give money. Strategic information level. What is the strategic information level? Strategy planning, management control, operational control. You see this strategic planning. This is the top of the company people. So these are the head of the people, or head of the company. Management control, this part is for managers, the middle managers. Operation, this is in the operation level. Let's say as an example, if you take a factory, there can be a factory director board who are taking strategic plan, and there is a management people, managers who will control it. They give the direction, they will control, and operation people who will do the operation. And the information that will flow from here to here, from operation to strategic, strategy operation. It's going like a circle. So, level of management. What is the level of management? As I explained you in this slide, the pyramid thing, here also it is clearly explained. The level of management is the hierarchy. Top management is there. They are the people who are taking strategic decision, strategic information is there for long term planning will be done. So, they will decide what will be kind of institute in next near future after 5 years time. So, our institute should be in this level. So, they will decide what the level should be in next 5 years. So, in order to do that, they will getting what? Strategic information. And middle level management, there can be managers in top level manager, director, CEO, those people will be there. In middle level managers, there can be middle managers who are directly dealing with operational level staff. In middle level management, for making control related decisions, they are taking control, they are cutting the cost and they are making some control action, security measures will be taken. So, they are working in that environment. Give me a little bit time. So, in this top management, they are taking the strategic decisions, and this middle level management, they are for making control related decisions. So, they are taking decisions and they are taking tactical information. Those are the information that are required for the controlling actions. So, practical information that coming for this one is taken as a summary of that. Then they know what are the things they have to do with controlling. For making day-to-day decision and short-term planning, they are doing day-to-day decision and short-term planning. And operation informations are there. These how the informations are flowing. In here also we talk about information, summarization, report. There are information, summarize, report, and objective, plans, instruction and target. They give the objectives, they plan, instruction and then the target. Here information are there, summarize are there, report. So, these operational, from the operational level, they are getting the operational information that will be give some insight about what to be controlled, summarize informations are there, then strategic informations are there, then long term planning is there, and control related decision will be taken, and day to day planning operations. So, these are the 3 levels mainly available in the management. What are those characteristics? We learn one to one. Strategic information derive both from both internal and external sources. So, this strategic information that come from internally and also externally. So, this management is technical, the summarization of information primarily generated internally, but may have limited external component. That has limited external component that can be generated internally, and this also coming through internal sources, operations transaction, those are the information. Summarize at high level, summarized at low level, summarized as processing of raw data. This is the raw data processing. This is summarized at low level. This is summarized at high level decisions are taken here. Relevant to the long term. This is long term strategies. This is short and mediums. This is immediate term. The immediately action should be taken in this operation. Otherwise, operations will be failing. Concerned with the whole organization, concerned with the entire organization, if departmental organization is there, here task is specific. You give a task to operate, for the low level staff and they do it. So this is task specific, this is departmental specific, whole organization specific. Often prepared an ad hoc basis that can happen. A routine and regular is the basis is there. This is very frequently happening. Actually, when you want to identify the details, you can memorize, you can understand by looking at this pyramid thing, the rectangle. So, through this one, you can identify the details. The comparison you can be identified. Quantitative and qualitative informations are there based on quantitative measures. Budget benchmark is there. So, largely quantitative, what number of product developed in the operation level will be measured. Focus on planning, future oriented. So, planning but greater focus on control than planning. So, those are the things that you can understand. Strategic level information system, SIS, help senior management tackle and address strategic issues. So, these are the information systems that used by the senior management. They use those systems and tackle and address strategic issues. So, what are the strategic issues that they will be having in near future? So, after 5 years time, you will be losing the whole market. This means the product that you have implemented in the market will be failing. You will not be having a very good market. Then, those are the strategic issues that you will be seeing. Then, long term trend, both in firm, internal and external environment. What is SIS help for? It helps for sales, senior management, sales and marketing, manufacturing and production, finance and accounting, human resources. So, in various management levels, these strategic information are required. EIS, Executive Information System. What are the features of that one? Take data from internal and external sources. Through the internal and external sources, they are taking the information. Makes information available to senior managers. So, there are senior managers. So, it is easy for them to understand the information through the EIS. And also, flexible mechanism is there. You don't need to to ask everybody to reply to you and summarize the information. Everything are available in flexible mode. Respond quickly. So, you can respond quickly by using this information system because informations are available now. So, responses are very quick. Has sophisticated data analytics and modeling tools. So, data is analyzed through the sales record and also the expenses that you did, all the information will be accommodated to do some reporting and that will be given to the top management to take the decisions. So, those are called executive information systems. So, in the executive information system that this dashboard is there because it shows information in the dashboard. In the dashboard, it gives the summarized information, the sales that you received during December, January likewise, and also loss report, and also open opportunity revenue by competitor. By competitor in here, they are at, gaining the access of the competitors' details. So, competitor details will be evaluated, that is taken through big data. So, it's a this dashboard is a interface, electronically design. So, you can see the details. Type of information system. There are information system types. What are those? Executive information system, EIS, we talk about this one. Executive people will be used for strategic decision. Decision support system used by senior management. There are 4 levels now, right? In this in the information system, there are 4 levels now. Earlier in the management, we talked about 3 levels. Now it is 4 levels in the system wise. And management information system is used by managers. Management information system used by the managers. Tactical transaction processing system used by the workers. Basic reporting. So these 4 elements, EIS, DSS, MIS, TPS. These things can be identified by understanding who are involved in here. In the EIS, executive was there. In DSS, senior managers are involved. MIS, managers are involved. In TPS, co-workers. Management information system. So, under management information system, this is about this level, the second level from the bottom. So, managers are using that one. Used for managers to do the decisions, to making decisions and coordinate with the co-workers and control the things and analysis based on the data which come from the operation level, from the co-workers, they analyze the data and decide what to do. Visualization of information. So, visualize the information to the next level even. Convert data from mainly internal sources to into information. Enable managers to make timely and effective decisions. DSS. What is the decision support system? It is used by who? Senior managers. Analyze this data with use in decision making. So, they are going to do some decision making based on the facts. So, facts are summarized by the managers. The data comes from the operation, facts are managed by summarized by the managers, then the senior manager analyze those data. Data received from internal and external sources, combine data and analytical models or data analytic tools. They are using analytical models. Data analytical tools are used to analyze the reports. Have more analytical power than other systems. So, this has more analytical power, not like the transaction processing, not like TPS, not like MIS. This system analysis, analytical power is there. Analyze large volume of data into a form that help managers make decisions. So, it use the big data into a form where help managers to make decisions. For others to make decisions, they are analyzing the informations. What is the value added network is? So, there can be different networks which provide some services to you to do your business. So, they are kind of an intermediary between business partners. So, there can be 2 business partners, there can be an intermediary network. This is called VAN, value added network. It is adding a value to the organization. So, it link separate organization together through electronic data interchange. So, electronic data interchange, what is EDI? So, in YouTube I am telling you to just type the EDI, then it will give a very good videos that talk about EDI. So, EDI electronic data exchange they are using heavily in the manufacturing environment also. So, as an example to value added network, that you may have seen that travel agent. So, they have a system to refer. So, they have developed their own system. That system will contact with some other common system, and that system called, let us say, Sabri Corporation and Global Distribution System. So, that provide information about the flights, the planes that is going here and there from one country to another. So, those informations are available as in a common platform. So, every channel travel agent can get those information in order to book the ticket. So, those are kind of value added networks. Management and operational level information system. So, there can be many management and operational level information system. It means these two levels, management and operation level, last two. So, what are those? TPS, Transaction Processing System, Office Automation Systems, Enterprise Wide System. We will talk about these things. What is TPS mean? Transaction processing. That fulfill the basic needs of record keeping of an organization. There is an input, that process, that give a output, like time card, employee list, wage and salary data. So, there are some transactions, those are input. Calculating pay, so through the attendance machines you will get the information, the server will get in the information, and that information will be calculated to pay the overtime. Calculating cost of benefit, calculating cost of taxes, updating ledger and databases, and pay checks and receipt, account balances, management reports. This is the reporting hierarchy, this is the input and this is the process. So, perform and record routine transaction to continue operation. Though there are different routine transactions, let us say HR system, there is a attendance machine, from the attendance machine the fingerprint record will be coming. Then automatically it generates the attendance, and also if you want to summarize the information, so you can get it also. And there is a payroll also, then automatically your salaries will be calculated. If you are on no pay, so if it is not recorded in the system, you will be getting a no pay from your salary. So, salary will not be paid for the date that you have absent. So, there can be billing system, from the cashier they will bill, they bill for the products, they take money. And there are some other purchasing system, procurement system. So, those are required for doing the transaction in the organization. So, doing the transaction in the organization, these TPS, Transaction Processing Systems, are required. Office automation system, I think that I do not need to go into details about this, you are familiar with the office automation system. That is a kind of computer system designed to increase the productivity of data and information workup. So, you can use Word, Microsoft Word, PowerPoint, Excel, PDF, email, Gmail and Office 365 email. So, there are kind of softwares that is installed in your PC in order to improve your productivity. If you don't have these things, you will have to write everything in manually and do it. So this is easy for operation. So this is easy for office operation. So office operations are automated by using this software. So office automation, those are called office automation systems. Enterprise wide system, ERP is known for this. So that is large scale application software package. It's a very large scale application software. Right? It's run the whole organization. It supports all the business processes and do the analytics and coordinate with all the business functions of the organization and collect all the information and use the resources. So it doesn't matter wherever it is located, geographically it has no limit. So they can reach to even from Colombo to Kandy systems instantly. So, but one thing is important, it shares a common database, that is called central database. So even you do the transaction in Kandy, that data will be appeared in the main system. So anybody can see it. It doesn't care about where you are located. Even that your transaction can be done in some other countries. So ultimately you will gain the summarization of information that in UK or Australia, so these are the products sold. These are the income that we received from those branches. SAP and Oracle. So these are good example for ERP. Already you may be knowing about these things. So just looking at this ERP system, you can identify the key element of this, that integrate that has the different system. It is incorporated together. Finance, accounting, sales management, inventory, supply chains, like this. Distributed data processing. So what is the distributed data processing? It's a computer networking method, right? Has multiple computers across different locations share a computer processing capability. Centralized server managing and providing processing capability to all connected systems. So there are different connected systems. See, remote access, SAP is there, workforce planning, SAP retail store is there. This is the SAP retail system. Post machines is there. So data is distributed in every area. That can be received via PDC. This is a gadget that you use to scan the product codes, and automatically that will data will come to the computer, and that will goes to this through the WAN to the head office system. So LAN and WAN's network use, so it used the local area network and also the wide area networks. So it can be located even in all over the world. Web-based enterprise wide software, which distance between the user and the data is irrelevant. So in this distributed data processing, you have to understand this, the theory behind. Distance between the user and the data is irrelevant. It doesn't care about where you are located. Geographically you can locate it anywhere. That's a very big advantage that you have in this distributed data processing. Data is distributed using this mechanism. Business intelligence system, BIs. What is this BI platform? So in the BI platform, in the BI system, is talk about what has happened past. Those are very intelligent systems, right? And what is happening right now, and it describe the situation. It describe where are you, what happened and what is happening now. Make the better informed decision that improves performance and create new strategic opportunities for growth. Based on the facts, they try to improve the performance and create new strategies for achieving the organization opportunities, and they look for the growth of the organization thereafter. So, the platform is looking like this. So, this data sources are there, right? Data will be coming from different sources, and data warehouse there. So, we will in the next slide that we will explain about what the data warehouse, data mart is. The extract is transform and load. So, information will be loaded, that is in the warehouse. It's like that in a factory there can be a warehouse that all the goods are located. Likewise, data also can be located, right? And also there can be data mart, and likewise, and also there can be cubes like summarize of informations. Online analytical processing is used here, and visualized report will be generated there. Dashboard, scorecard, earlier we talked about what the dashboard is. So, you will be getting the very good information, the summation of information, summarized information will be getting in visual form as well. So, this business intelligence system will tell what happened and what will where I am, what happened and what is happening now. So, it is always describe the situation. As an example, Coca-Cola bottling company maximize operational efficiency by using these BI systems. It is a very large independent bottle network partner. Manual operating process restricts access to real-time sales and operation data. So, it was issue for them because let's say they have a thousand or hundred of factories all over the world. Let's say in Sri Lanka they have hundred of factories, locations. So, those are sell from they are selling the products. So, you need the amount of sale that you do in a day after 6 p.m. So, management will be reviewing those reports. So, it was not happening earlier at the real time, right? Then what Coca-Cola company did was they implemented the BI tool and automated the processes. So, solution was Coca-Cola business intelligence team handled reporting for all sales and delivery operation at the company. With their BI platform, the team automated manual reporting processes, saving over 260 hours a day. So, when you automated these things, they could achieve of saving 260 hours. So, let us say in order to process the information and summarize it and give it to the management, earlier it may have taken about more days, more than let us say more than a week. But now within a day the summarized information can be seen by using the business intelligence system. What is data warehouse? Data warehouse is a system actually, so that take data from many different sources within an organization for reporting and analysis. So, that is stored data, that is storing data from different sources, and those data can be receive into the warehouse from the internal and external sources as well. So, using those data, so using the online analytical processing technology, so they generated the report. So, they have different data analysis techniques. So, this online analytical processing will do that. Then those data will be coming to the warehouse and then the report will be generated. So, data mart is a subset of a data warehouse. Data mart is a subset. So, in the question paper, if they ask what is the subset of data warehouse, so you have to understand about this data mart. Data mart contain repositories of summarized data collected for analysis, a specific section or unit within an organization. Sales department, marketing, HR. So, this data warehouse, let's say in a warehouse, in a normal warehouse, there are different products are located in different places. So, you are going to separate those things by the product ranges. Then you are going to make data mart. In here, in the simple diagram that it shows how the architect of this data warehouse. Data source, operation system, ERP, CRM, customer relationship management, flat files. There are different data sources to gain the data, gain the information. And staging area, it means storage area during ETL, extract, transform and load. Extract information and transform and loading will be done here. ETL mechanism is implemented here. Data which is coming from operational level, operation system, ERP, customer relationship system and flat files. There are many systems that the data will be captured and then it is stored in here. And warehouse, then it goes to the warehouse. The data loading is there now, then it is located in the warehouse as metadata, summarized data and raw data. What is this raw data? This is a kind of data that is not changed, it is new now. Let us say raw materials. Raw material is used to develop some products. So, it is like this raw data that has not changed, the errors are not normalized, no normalization is done. So, raw data is there, so summarization are done. So, metadata. So, in the next slide we will talk about this one in good understanding way. So, data mart, purchasing, sales, finance, inventories, those data which come from these data sources and storaging and also to the warehouse, these data will be separated into data mart. Let us say purchasing record, sales record, finance record, inventory record. These are the summarization of record in separate, let us say separate files. So, these are the data marts that is specialized. One data mart is specialized is one specific subject area. That can be purchasing, sales, finance, inventory, IT, or different subject can be there. And then users what they see, analysis is analyzing the data and reporting it, do the reporting, and data mining, anomaly detection will be reduced, and also some different technique, data mining technique will be used. Earlier in the last slide we learned that. Please refer to that slide and understand about data mining, that I have already talked about that. then using data mine they do this, then analyze the data and reporting. Different report can be done. Data mart. What is this data mart is? So, this is the warehouse that we talk about. All data which is coming from different sources will be stored here, and it is loaded and then stored here, and then that will be divided into different categories. That is called data mart. Sales category, finance, products. So, from this picture it is easy for you to understand. Metadata. What is this metadata is? Here we talk about metadata here. See the data warehouse architecture picture, the metadata is there. What is this metadata? If you look at this cat, this picture is taken. There are some information. If you go into the properties of the picture in the computer, sometimes you may be taken it. Especially if you have an Android phone, the new Android software captured the location information as well when you take a picture. So, it captures where it is taken, location, and all the information will be captured. So, when you go to the properties of the file, that automatically gives these details. See, file name, author, date taken, and location, everything are there. So, and also through the location map, you can locate the place also. By looking at the picture, you can locate the place also. Earlier, that if you have taken a picture, that you just look at the picture, and if you go to the property, that shows about only the format of the property and size of the file. But now, they are using the metadata technology. You can include other information as well. And this example is a nice one that you can remember. This is like indexing. See, in this book, there is an index, right? That index is summarizing. That has table of content. So, these are the metadata. It is a summarization of information. So, information dashboard design in a see. So, these are the summarization of information. So, these are metadata. Data warehouse. Historical data for all part of the business. Data warehouse contain historical data for all part of the business. Database current real data is stored. Historical data, real data. All the part of the data will be stored. One part of the business data is stored. In the database, only one part of data will be there. But in the data warehouse, different data parts are there. Historical data parts. Storage, large quantities of historical data. Storage is very high. Store current transaction only. That doesn't store much more transaction which are coming in historical background. So, it stored the current transaction. Data is less accurate but fast to retrieve. We cannot judge that the data is accurate in this data house. It is less accurate than databases. But it is very fast, right? It has very good indexing, it has very good retrieving methods. So, the data can be accessed very fast. In the databases, more accurate but slow to retrieve. Enable fast complex queries across all the data. There can be complex queries. Enable fast access to specific transaction for ongoing business process. There are specific transactions are there. OLP use, the technology OLP use in also OLP online analytical processing use, online transaction processing use, OLTP, OLAP. This is analytical concept is there, this is the transaction concept. Analytical and transaction. So, you can differentiate these two from these two words. Small number of concurrent users. The concurrent users are very small. There are thousands of concurrent users in databases, not like data warehouse. Let's go to report. So, about dashboard we talked about in earlier also. This dashboards provide the summarization of information. What is drill down report? Drilling down, it means what? Capability to look at increasingly details. Dashboards are often also combined with drill down report. So, this is the dashboard. In this dashboard, let us say here in here we talk about December 2020 sales forecast by competitor. So, if you click on this, then this information can be retrieved. Likewise, this is a dashboard, right? From this dashboard, they give a summarized information. When you click here, the detailed information can be seen. It means this will be, the summarization report will be drilled down to more informational report. It is called drill down report. So, the executives, the senior management, you first look at this one. If they want to go into details, they click it here and they go to these days. Exceptional report. What are these exceptional report? So, please remember that we are talking about, we talk about the different databases, technologies. Now, we are talking about reports, right? So, this is the ultimate point. An exceptional report is a document that states those instances in which actual performance derive significantly from expectation. So, these are kind of a exceptional report. Normally, this is used most of the time used for KPIs, key performance indicators. So, there can be some key performance indicators. So, that can be highlighted through this exceptional report that give a specific idea, the information that is much more important to the spectators. Those are the managers can be. So, likewise in here you can see the data can be clustered into days. And last, let's say within last month, how many products are sold. In the age wise, what is the product? Then and also what type of people have brought. So, those are kind of exceptional report. That is actually required for managers to take decisions. The presentation of reports. So, this is also a presentation, like you can present the things. So, taking care with presentation can make a significant difference to the professionalism and appearance of a report. Let us say that you are just taking some summarized information and put it to a presentation and submit to the board, submit to the senior management. Will they accept it? No, they need some summarized information in a presentable manner. So, that should be very clearly structured and it should have very logical order. So, when you are doing presentation, actually that as auditors, as accountants, so sometimes you may be able to present some report to the management. Your supervisor will ask you to present some information. So if you are taking a bunch of file and going them there and sit down with him and explain about each and every things in the file, so will it be working? No. Then the supervisor will tell you to summarize this and come with a very good presentation. Then you have to prepare a very good presentation. And the standard format can be there, format, style and report, and length also the matter of that, because the standard format, let's say that there can be different format that the organizations can use when doing the presentation. And length, the length of the report. So if it is a summarized report, not like a lengthy report, it is give a very good understanding for the people who read it. Otherwise, if you give a very large document, so that will not be summarizing the information instantly. So they will have to look into each and everything to understand that one. Big data, we talk about that one. So, but we didn't talk about the use of big data. So, big data is used for what purposes? Used for last mile optimization. Using big data can help to increase last mile. A major constraint on the level of the operation efficiency in a distributed network is so called last mile. The final stage of a supply chain in which goods are handled over the receipt. The final stage of a supply chain. Let's say you are going to send some parcel to Japan. So initially, once you go to the courier service company, you make it bill, and then they will parcel it and make a note that will be delivered. Then you will be asking at what time this will be delivered. They will give a approximate time that within 48 hours this one will be delivered, and you send it, and it has automatically calculated the time now, because they know the path. So and I'll explain it in the board, that then it's very clear to you. So courier service, this is there. So there's a parcel that you are sending it. You are sending it through a vehicle. The courier service is sending it through a vehicle, and it goes to the airport, and so this is the plane flight. Through this one, it will be going and then reach to Japan. Let's say this is Sri Lanka. Then you are calculating time. This will take about 2 hours. Likewise, 6 hours waiting will be there. Then it goes to one airport. It is let's say 12 hours. 12 hours ultimately it reaches here. From here you are going to transfer to someone. It will take 2 times. In here, let's say the took about 40 hours. Going here to here, 8 hours is the one. So initially you have given in the courier service, you have given 40 hours within 48 hours that will deliver. This is the one. Let us say due to a disaster kind of things, what will happen? This is the last mile that you are going to achieve, but you cannot achieve. But you get the detail through the big data. Okay, there is a flooding area is here, so you cannot go this route. Then you will be identify a different route, right? It can be going like this and coming and here, right? Somehow you can reach within 8 hours, even though this through this route. If you go this route, you will have to wait long hours and it will take about another 40 hours. But through this big data, they get the details and reach to this person in the last mile. So, it is called last mile optimization. You are achieving the transportation of goods through the big data and sending it to the customer very quickly. So, big data help, so that is called last mile optimization. Big data helps capacity planning. So, it analyzes the historical data, historical capacity and utilization rate of transit point and transportation routes, those are calculated. So, that predict the future capacity that occurrence required based on the fact he has. Seasonal factors can be there and there are different the data, the factors. Based on those things, the plan in the capacity. They say last year this was the capacity, and but due to some of the disaster things, the capacity planning had a lost. So, all those information are there. So, seasonal factors also can be embedded. So, you are planning. So, in this New Year season, you will be not be getting much more sales because of COVID-19 situation. So, you are planning, your capacity is planning now. Based on what? Based on the big data. You have enough data in your hand. Now, you are going to plan for the future. Big data helps for risk evaluation and resilience planning. Oh, there can be risk. Let us say when you transport some goods from Sri Lanka to Japan, there is a tornado. If you search this in the Google, it is like a cyclone which comes with air that demolish all the infrastructure. So, you can avoid that such kind of a disaster environment. So, if you have big data, so automatically your system says, okay, you have 48 hours to deliver one goods to Japan. Suddenly there is a disaster came, you are changing the route now. So, it gives a different route to reach to the person. Big data creating transparency. So, it is transparent to everyone. Example, answering shop transaction and provide those information to take decision. So, when you go to supermarket, you buy different products. So, your data will be captured by through the information that you feed to the systems, and then they will be analyzing and summarizing the data, and they will know that what product will be buying and what is the amount that you will spend at Keys, let us say Keys Super or Kagis or whatever the supermarket, so Logico, whatever. So, when you go into the supermarket, that they have the information, they know that every month you will spend at least 10,000 rupees in shopping in the supermarket. So, they predict their future income through that. So, your involvement is transparent, your buying decisions are transparent. So, they know your behavior pattern and everything. So, it improves performance. Example, customer feedback given in the social media can be taken to improve the products. So in the social media there can be so many the comments given by them, and also for different tools that we are using, that also will be providing different feedbacks. Use of big data. Here we talk about some way of using big data, and here are some other example also. Market segmentation and customization. Using the big data, you can divide the market, you can segment the market, you can market your product in the different market by segmenting. So big data helps decision making. So when you want to take a decision, that provide the relevant information to take the decision based on the facts that you have in previous year. You know exactly at what time you need this much of product. Let's say you have you need additional 1,000 of products in December because of seasonal promotions, seasonal enrollment. And also sometimes let's say that bookshop, let's check a bookshop, then they know that in December sales are very higher because students are going to the new school in January. So they are tend to buy the books. So sales are very higher. So they are planning their product using the big data. So they know in what region that they will buy it, and what are the books that they want to buy. So what kind of the rule book ko, not rule book ko, and story book ko, there are different pencil, and they know what type of requirement is required by the customer base. New product and services. Use data about social trend and consumer behavior to create new product and services to meet customer need. So they analyze the behavior pattern of the customer. They knew what kind of taste that the customer is having. Based on this information, they develop new product. Through the new innovation they develop, and new services they will develop in order to cater the customer requirement, because now they using big data, they understand what the customer requirement is. Data science, data mining and analytics. What is data science is? Data science is all about uncovering, finding data through different protocol tools, process tools, techniques involved to identify pattern from raw data. So you have raw data, so that is as that has not analytical power. So only the raw data is there. So using that raw data, you are going to find solutions, uncovering the findings. This is the life cycle in the data science. Data discovery, data preparation, mathematical models, discover the data through the different sources that will be coming, that can receive as structured and also unstructured. Then prepare those. Prepare data. So data may have in the different format. So now in this data science, you are making it a readable format. In a readable format, you are making it. So those raw data will be prepared, and mathematical models will be used. There can be so many relations, so many hypotheses can be there, so many relations with the other. So those relationships will be identified. It means, as an example, if you go to supermarket and buy liquor, you will buy other beverages as soda, Coca-Cola, Sprite, and there are so many other things that you require if you buy liquor. So, there is a correlation. So, you are identify through the mathematical models, you identify those things and then getting things in action. So, gathering those information and deriving outcome based on business requirement. Based on the business requirement, you are going to do some actions in order to make some more profit through this data science. So, then communication. Communicating finding to the stakeholders and decision makers. So, you are now summarize the information, now you are going to tell it to the decision makers. They can be your directors, your managers. So, you are going to summarize those information and those information will be summarized and informed to others as well. So, data mining. So, this one was also talking in the previous slide also. In the process of finding anomalies, pattern and correction within the large data set to predict outcomes. So, you must read those things which I have explained earlier. Data analytics can be there, connecting patterns and trend. So, identifying the data pattern, data trend, the sales volume, the sales trend, the pattern of last few months. So, you have to analyze those data. So, data mining versus data analysis, what is the difference? Data mining assists in identifying the key pattern, data mining identifying the key pattern in the existing data set, whereas data analysis is in generating verified hypothesis of the data. In this data analysis, there is a correlationship that will be identified. In data mining, identifying the key patterns. So, in the data mining, identify the key pattern, the trend that the customer base is having, what are the goods they are purchasing, what are the goods they are selling. Likewise, they are identify the pattern, and through the pattern actually they are in the data, through the data analytics they are identifying the relationship in different data set. So, these two has a combination of that, these two are working in combining. Robot, oh, these are small things that I am not going to details now. So, there can be robot like these are the new technologies that you have to identify, the material handling robot, assembly robot, inspection robot. So, material handling robot, they will handle the materials, and assembly robot that in the assembly environment they can do different activities by their own, and car assembling like that. Inspection robot, they will go here and then inspect the quality of the goods, and also if any errors occurs they will rectify those errors. So, automated guided vehicle. So, you may have seen this kind of a vehicle that used in the factories. So, this is like a vehicle that have wheels that goes here and there, and also they have he has a path. So, that goods are located there, and also it gives a signal to front. The warning fields are there, protection fields are there. Then this, when this is transporting one good to one product to other location of the factory, it goes, it automatically goes. There is no need for human inputs, right? Without human inputs, the vehicles are automated and they will go. Self-driving car also an example for this one. So, if somebody comes in front, they will stop it. It's automatically stop. There are sensors that identify the vehicle and person and stop. So, machine learning. Machine learning a computer system to perform a specific task without using explicit instruction. Application of artificial intelligence, ability to automatically learn, improve from experience. So, machine learning is, let us say there is a robot. In this, if you go to this video, you can identify there is a robot. That robot, what he does is, he discuss with you and identify whatever you tell, he react to your questions. So, it learn by you. So, it called artificial intelligence. Through the artificial intelligence, those learning mechanism can be built inside the robot. So, those are happening in the live environment now. So, I'll show a small video. I am not going to show this one, but so when you are free, that I am telling you to look at this video.
Because honestly speaking, Tom-based company Hanson Robotics, Sophia was activated so that humans could create and make new discoveries.
This is the robot.
First, we have
He
to
talk
make
with
sure
the
we
human.
inherit the biases of their creators and
The human asks some questions. He will ask.
Do you think you're cooler than us? Some might think I have my head in the clouds, but I really do have my head in the cloud.
So I'll upload this to the video as well. Said you can refer to that one, right?
Focused on ethics of brands and
Okay. So we'll stop now. So we'll meet from the next chapter.